Do you really know what your credit score means? For most of us, it's just a mysterious number that pops up when we apply for a loan or a credit card. But have you ever wondered what's really behind that number and why it seems to follow you everywhere? Most people think it's just for loans, but it's so much more. Your credit score is woven into the fabric of your financial life, quietly influencing decisions you might not even realize. Your credit score is a silent gatekeeper, quietly shaping your life behind the scenes. It's like a backstage pass that determines which doors open for you and which ones stay firmly shut. It's not just banks. Landlords, employers, even insurance companies might be checking it. They use it to judge your reliability, your trustworthiness, and sometimes even your character. Your financial reputation is out there, influencing where you live, work, and what you pay. A single number can affect your rent, your job prospects, and the cost of your insurance premiums. Why all the mystery? Because confusion can be profitable for lenders. The less you know, the easier it is for them to charge you more or offer you less favorable terms. If you don't understand the rules, you might accept higher rates or worse terms. You could end up paying thousands more over the years, just because you didn't know how the system works. But here's the truth. There's no magic behind it. It's a system built on rules and patterns. And once you see those patterns, you can start to take control. Once you know how it works, you can use it to your advantage. You can make smarter choices, improve your score, and open up new opportunities for yourself. I'm here to pull back the curtain and show you how it all fits together. We'll break down the myths, the facts, and the steps you can take right now. By the end, that 3-digit number won't seem so intimidating. You'll see it for what it really is, a tool you can master. Let's get started. Meet Sarah. She's smart, ambitious, and full of dreams for her future. But like so many people, she made the mistake of ignoring her credit score, thinking it was just another number that didn't really matter in the grand scheme of things. She paid her bills late from time to time, brushing it off as no big deal. After all, life gets busy, and who hasn't missed a payment or two? But those small slips started to add up, quietly chipping away at her financial reputation. When Sarah finally tried to buy her first car, she was shocked. Her low credit score meant she was offered sky-high interest rates, and the cars she really wanted were suddenly out of reach. She realized her choices were limited, not because of her income or her ambition, but because of that 3-digit number. Renting an apartment was no different. Landlords looked at her credit and either asked for a much bigger deposit or simply chose someone else. It didn't matter how responsible or friendly she was. Her credit score spoke louder. Even when applying for jobs, Sarah found that her qualifications and personality sometimes took a back seat to her credit history. That number seemed to follow her everywhere, quietly influencing decisions about her life. That's when it hit her. Your credit score is more than just a number. It's a key that can unlock doors to new opportunities or keep them firmly shut if you're not careful. With a good score, doors to better apartments, lower interest rates, and even dream jobs can swing wide open. But with a poor score, those same doors can stay locked, no matter how hard you try. Ignoring your credit score is like ignoring a slow leak in a boat. At first, it might not seem urgent, but over time, the damage builds up. Eventually, you'll find yourself in deep water, struggling to stay afloat. The good news? Sarah decided to take control and started learning about credit. She realized that anyone can improve their score with the right knowledge and habits, and so can you. Your credit score isn't set in stone. It can change, sometimes faster than you think, if you make smart choices and stay consistent. With the right moves, you can turn things around and open doors you never thought possible. Let's see how Sarah, and you, can rewrite the story. What actually makes up your credit score? It's simpler than you think. First, payment history. Paying bills on time is crucial. Next, credit utilization. Using less than 30% of your available credit is best. Then, length of credit history. Older accounts help your score. Don't rush to close that old card if it's in good standing. Credit mix matters too. Handling different types of credit shows responsibility. And finally, new credit. Opening lots of accounts at once can hurt your score. Each application causes a small, temporary dip, so be thoughtful about when and why you apply. Master these basics, and you're already ahead. It's not rocket science, just smart habits. Let's clear up some common myths. It's time to clear up some of the biggest myths about credit scores, because what you don't know can actually hurt your financial future. Let's separate fact from fiction and make sure you're in the know. Myth 1. Checking your own score lowers it. This is a super common misconception, but it's completely false. When you check your own credit score, it's called a soft inquiry, and it has absolutely no impact on your score whatsoever. In fact, regularly checking your score is a smart move. It helps you spot errors, track your progress, and catch signs of identity theft early. Think of it as a regular health checkup, but for your finances. The only time your score might dip is with a hard inquiry, when a lender checks your credit because you've applied for a loan or a new credit card. But even then, the effect is usually small and temporary. Soft inquiries, like those from checking your own score or pre-approval offers, don't hurt your score at all. Myth 2. Your income affects your score. This one trips up a lot of people, but it's simply not true. Your credit score is all about how you handle debt, like paying bills on time, keeping balances low, and managing credit responsibly. It doesn't matter if you make a little or a lot. What counts is your financial behavior. Even a billionaire can end up with a poor credit score if they miss payments or rack up too much debt. On the flip side, someone with a modest income can build an excellent score by practicing good habits, like paying on time and keeping debt in check. Lenders do look at your income when you apply for a loan, but that's just to see if you can afford the payments. Your credit score, though, is all about your track record with borrowing and repaying money. So remember, focus on your actions, not your paycheck. Good credit is built by making smart choices, no matter your income level. Now that we've busted some myths, let's take a look at how credit scores came to be and why they matter so much today. Credit reporting isn't new. It started with shopkeepers tracking who paid their tabs. Over time, those ledgers became today's credit bureaus and scores. In 1989, FICO introduced the score we know now. From gossip to algorithms, it's been quite a journey. Understanding your score means taking control of your financial life. Have you had a Sarah moment? Share your story in the comments. We all learn better together. Next time, we'll reveal a financial secret the wealthy use: compound interest. Subscribe and hit the bell. You won't want to miss it. See you in the next video.